S&P 500 Index, SPX, long-term chart analysis. The S&P 500 Index, SPX, continues to be a focal point for investors seeking insights into market trends and opportunities. With the recent conclusion of the presidential election and a notable Republican victory, market participants have been keenly observing the implications on the financial markets. The next several minutes will provide a comprehensive analysis of the S&P 500's performance, current market movements, and future expectations based on long-term chart analysis. Last week's update. Last week, we maintained a bullish stance on the S&P 500 index. This approach has been part of a broader strategy designed to protect investors from bear markets while allowing for short-term fluctuations without triggering sell signals. The S&P 500 strategy is rooted in long-term chart analysis, avoiding impulsive changes influenced by emotions or news events. This week's developments. Following the presidential election, the market strategy experienced a notable 4.66% increase within a week. However, approximately half of those gains were retracted as investors chose to take profits. The conservative S&P 500 strategy continues to focus on accommodating market fluctuations without attempting to time every minor movement. We currently hold a bullish position in the RIDEX S&P 500 Nova Fund, RYNVX, or other S&P 500 index funds or ETFs like SPY. S&P 500 Index, SPX, and current chart analysis. The previous week was particularly favorable for the bulls, with small caps in the Russell 2000 Index, RUT, rallying nearly 9%. This resurgence of small caps has long been anticipated, and it appears they have finally achieved it. However, this week saw some declines as strong economic reports raised concerns about fewer future interest rate cuts. On Friday, economic data, coupled with comments from Federal Reserve Chair Jerome Powell, suggested a shift in expectations regarding interest rate reductions. Powell's remarks indicated that the Fed is not hastening to cut rates further. Despite stocks reaching new all-time highs and the market's relief over the election's conclusion, profit-taking commenced, resulting in the S&P 500 Index, SPX, pulling back by 2.12% from its peak. Currency and economic indicators. The U.S. dollar surged by as much as 1%, reaching levels near November 2022, driven by investor optimism about Trump's policies benefiting the currency. Higher tariffs are expected to elevate prices, limiting the Federal Reserve's capacity to cut interest rates. The Trump administration is also expected to spur growth through tax cuts, deregulation, and extended fiscal stimulus. The NYSE Advanced Decline Daily chart showed breadth declining to its rising 50-day line, which served as support. The outlook remains positive for higher highs as market breadth supports the stock market's advance. Economic reports and market reactions. The Dow Jones continued its post-election rally on Monday, hitting new record highs amid optimism over Trump's business-friendly policies. Traders now await key CPI and PPI data, alongside insights from Federal Reserve officials, to gauge future Fed actions. The Real Clear Markets/TIP Economic Optimism Index surged 13.4% in November to 53.2, its highest in over 3 years, marking a return to positive sentiment after a prolonged negative period, driven by Trump's re-election. U.S. consumer inflation expectations have decreased, while the annual inflation rate rose to 2.6% in October. Total household debt hit a record $17.94 billion in Q3 2024, with delinquency rates slightly increasing. The average interest rate for 30-year fixed-rate mortgages climbed to 6.86%, the highest since mid-July. Retail sales rose 0.4% month-over-month in October, surpassing market expectations. Conclusion. The SPX position remains bullish. Aggressive investors should consider the RIDEX Nova S&P 500 Fund RYNVX or other bullish S&P 500 index funds or ETFs like SPY to capitalize on potential market opportunities. Long-term chart analysis suggests that despite short-term fluctuations, the overall trend remains positive, offering investors a chance to benefit from future market growth.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.